I think you have to continue to disrupt yourself. I mean, you can never stay comfortable. You can never feel like, okay, now we figured it out and we can just kind of, harvest what we've done. You always have to innovate. You always have to stay relevant. Did you know that the 787 Boeing Dreamliner contains approximately 2.3 million parts, which have been supplied from all over the world? In comparison, the 737 had only 400,000 parts. Or that 3M was the first company to use office voicemail when it became available in 1980. Or that Caterpillar uses 15 million pounds of steel weld wire every year to create its machinery. Hey everyone, Dan here with Ethos Investing. I want to thank everyone for their support as we just reached 500 subscribers. I plan on doing a Q&A, so please comment with your questions below. Please like, share, and subscribe if you haven't already done so. Stay tuned to hear some interesting information about the industrial sector, and later in my 5th sector portfolio review, we will discuss my 2 holdings in my 5th smallest sector by portfolio value. Now let's take a look at the intricacies of the industrials sector. The industrials sector is the 6th largest in the S&P 500, accounting for $6.15 trillion. The benchmark sector produced an 18% year-to-date return and a 3.74% return in the last month. The industrials sector includes companies whose businesses are dominated by one of the 14 following activities: the manufacture and distribution of capital goods, including aerospace and defense, construction, engineering and building products, electrical equipment, and industrial machinery. It also includes the provision of commercial services and supplies, including printing, employment, and environmental and office services. Lastly, it entails the provision of transportation services, including airlines, couriers, marine, road and rail, and of course, transportation infrastructure. With economic recovery and growth starting to gain steam, the sector has begun to pick up once again, which is a positive sign for the historically pro-cyclical industrials sector. Additionally, the prospects for an increase in infrastructure and clean energy investments with this new administration is likely to support the machinery and building materials industries, thus benefiting this sector. Transportation and air freight have benefited from a return in demand as economies reopen, buoyed by relatively low fuel prices and interest rates, though both are starting to creep upward. Additionally, the aerospace and defense segments continue to face difficulties due to low airliner demand and uncertainty surrounding the political appetite for defense spending. Let's look at a positive point and a negative point for the sector going forward. One positive for the sector is that purchases are likely to increase if global growth continues to improve after the recent economic health crisis. On the flip side, a negative for the sector is that aircraft demand is low and will remain so until mass leisure travel resumes. Now let's take a look at how one can invest in the sector. Prospective investors in the industrial sector can take the leap into the market in multiple ways. The choices include purchasing equities of specific industrials companies, buying mutual funds, and of course investing in ETFs. There are several industrials ETFs that provide diversified exposure to this sector. A few of the more popular ETFs include the Industrial Select Sector Spider Fund, or ticker symbol XLI, Vanguard's Industrial Sector ETF, ticker symbol VIS, and of course iShares US Industrials ETF, or ticker symbol IYJ. Some popular industrial sector companies by market cap are Honeywell, or HON, at $157 billion, United Parcel Service, or ticker symbol UPS, with a total market cap of $188 billion. Union Pacific, or ticker symbol UNP, with a market cap of $151 billion. Boeing, or BA, at a market cap of $133 billion. Caterpillar, or ticker symbol CAT, at nearly $132 billion. And rounding out the list is 3M, or ticker symbol MMM, at $118 billion. In the US, the movement toward clean energy, along with competition-enhancing legislation and a presidential administration committed toward renewable energy resources, has many forecasting growth for the industrial sector into the 2020s. If you feel this content is going to help you on your investment journey, please hit the like and subscribe button and turn on the bell notification so I know that you are following me. Now let's take a look at the 2 dividend industrial sector holdings in my portfolio. We will start with the smaller position first. Did you know that this company generates so much revenue that it has a bigger economy than the entire country of Costa Rica? Any idea on which company this might be? Comment below after the video finishes and let me know if you got this one correct. The company is Caterpillar. The company was formerly known as Caterpillar Tractor Company and was founded in 1925. It is headquartered in Deerfield, Illinois. Caterpillar manufactures and sells construction and mining equipment, diesel and natural gas engines, industrial gas turbines, and diesel-electric locomotives worldwide. The company operates in 5 segments: the construction industries segment, the resource industries segment, the energy and transportation segment, the financial products segment, and the all other operating segment. Caterpillar is the world's largest construction equipment manufacturer. In 2018, Caterpillar was ranked number 65 on the Fortune 500 list and number 238 on the global Fortune 500 list. Caterpillar stock is a component of the Dow Jones Industrial Average. Now let's take a look at my holdings. I am currently holding 8.228 shares of Caterpillar. At a current dividend yield of 1.72%, Caterpillar drips $33.90 a year into my hybrid portfolio composed of both single stocks and, of course, ETFs. The largest holding in the industrials sector within my portfolio will likely come as no surprise to most. Let's check out a quick fact and see if you can name the company. Did you know that US astronaut Neil Armstrong walked on the moon wearing space boots with soles made of synthetic material from this company? Any guesses? The answer is 3M, which is the largest dividend stock holding in the industrial sector of my portfolio. The company was founded in 1902 and is headquartered in St. Paul, Minnesota. 3M Company develops, manufactures, and markets various products worldwide. It operates through 4 business segments: safety and industrials, transportation and electronics, healthcare, and lastly, consumer. The safety and industrial segment offers personal safety products, industrial adhesives and tapes, abrasives, closure and masking systems, electrical markets, automotive aftermarket, and roofing granules to industrial, electrical, and safety markets. The transportation and electronics segment provides electronics such as display materials and systems, electronic material solutions, automotive and aerospace, and commercial solutions. This also includes advanced materials and transportation and safety products to transportation and electronic original equipment manufacturer customers. The healthcare segment offers medical and surgical supplies, skin health and infection prevention products, oral care, separation and purification sciences, health information systems, drug delivery systems, and food safety products to healthcare industry. The consumer segment provides home improvement, home care, and consumer healthcare products, as well as stationery and office supplies to various consumers. Now let's take a closer look at my 3M holdings. I am currently holding 11.437 shares of 3M. At a current dividend yield of 2.91%, 3M drips $67.71 annually into my portfolio. As a sector, the industrials positions account for only 0.85% of my total hybrid portfolio holdings, with a value of approximately $4,877. The two companies account for a total drip of $101.15. As I mentioned in my previous 4 portfolio sector reveals, the goal continues to add around $3,000 a month to the portfolio through the end of the year. Keep an eye out for my next portfolio sector reveal, and please comment below what sector you think will be next. If you missed my first 4 portfolio sector reveals on energy, communications, utilities, and financials, please check them out. I'll leave links to these videos in the description. Until next time, as always, lead the way, motivate others around you, remain physically and mentally resilient, foster a positive investing ethos, be pragmatic, and have fun achieving your goals. Thank you so much for watching, and see you next time. Remember, I am not a financial advisor. The opinions expressed in this video are solely for educational and entertainment purposes only. Any stock purchase I show in videos should not be considered an investment recommendation. Investing involves risk, and you should do your own research. For investment advice, please seek the counsel of a financial advisor.